What happened is over the weekend, my team started noticing that CZ was liking some tweets that were disparaging towards Alameda, saying that their balance sheet was technically insolvent. And we started doing research into what was happening from that point. And there was an article out on CoinSpot, I believe, which leaked the Alameda balance sheet, which is Sam Bankman-Fried's private company and market maker for FTX, that said the balance sheet was insolvent, and that set the whole house of cards falling.
Was it true? Is it true?
Well, it appears to be. Reports are that they were leveraging the FTT tokens, which is the FTX exchange token, and using that during the previous crash that we had, they were bailing companies out, and it is believed that it is true, and that they will declare bankruptcy. That's what we know.
Rival crypto exchange Binance was looking at buying FTC, and then within 24 hours pulled out again because of a US regulator's investigation, but also what it says it found during its own due diligence. Do we know any more details of what they think they found, or is it more along the lines of what they've already rumour milled?
Well, my team are telling me that it was an $8 billion hole in the balance sheet, which is, massive, as you can imagine, for our industry. So that's what we're hearing, and that's we have people looking at the balance sheet and doing analysis. So it is worth noting that Binance were already a large holder in the FTT tokens, and they were the first people to start selling. So I would say that they already had a great deal of knowledge about the business prior to that, because they were involved from day one. They were one of the seed investors of FTX.
And so what created that $8 billion hole? Was it the fact that they were lending out clients' own assets?
Yeah, leverage. That's it. And it's the same thing over and over again. And when you leverage money that isn't yours, then it gets ugly, and this is what has happened.
So FTX made out to clients and to regulators and to Washington that it was the preeminent exchange. Testimony from Sam Bankman-Fried said that it did not lend out customer deposits and that customer assets were safe. So clearly not the case.
Clearly not the case. That tweet is still there. I think that this investigation will run for a long time, and I think that if it's proven that all of this is true, I really did respect Sam, but it looks like he really has done the wrong thing and tried to cover it up. So time will tell, right?
What happens to the coins that people had in the FTX exchange? Are they gone?
They'll be worthless. Yeah, we owned some for the fund, and when the team started seeing the tweets on the weekend, we had an emergency investment committee meeting on Monday morning first thing, and we elected to sell because we believed that if everything was true, which we couldn't prove, it was still a red flag, and if everything was true, the tokens would be worthless, and that is what looks like will happen.
Whoa. So is this a sign that people should not be holding their crypto in brokerages and exchanges?
Yeah, look, so there's two issues here. There's the token, and then there's all the money that was sitting on their exchange. So my understanding is that they've frozen withdrawals on the exchange. So even people that didn't own the token will lose all of their funds on that exchange. There is a big issue with exchanges in terms of the look-through to client funds. As a regulated financial entity, you are not allowed to commingle client funds and use them for capital purposes. That is not, because crypto is not regulated, that's not happening. And even Coinbase, who are listed, if you have funds on their platform and they go into Chapter 11, it clearly states in their prospectus that you become a creditor, which is not the case if a stockbroker goes broke, for example. And so that's why we really believe regulation and legislation needs to come into the market.
So what do people do? Where should people keep them? On a USB stick?
Yeah, so look, this is going to sound super geeky, and I'll just take it right back and be very simple because it's really important for people's safety. So when we trade in our fund, we move assets onto an exchange for a very short period of time. We buy or sell them on the exchange, and then we move them into what is called a cold wallet. Now that cold wallet is offline and we are the owners of that wallet. Therefore, we're not subject to the risk of exchanges, and I highly recommend that people look into that. It's quite easy and quite accessible these days to have a cold wallet, and yep, literally some people walk around with a flash drive, and even some of the really great crypto legends like Joseph Lubin will walk around with a backpack, and that he's got all these flash drives in his backpack. So that's what we recommend to do. That's what we do for our business. We have Bitcoin on our balance sheet as a listed Australian company, and we have a BitGo wallet where it's all in cold storage, and we do that for our fund as well to protect investors and make sure that we're not vulnerable to what happens. I would say though, that's the majority of our funds, and some of our funds we do what is called staking, which means we stake the chains so they sit within the ecosystems that you use for staking.
Lisa Wade, thank you very much for your time.
My pleasure.